Welcome to the deep dive. It's easy to get completely lost in the world of trading, right? So many tools, so many indicators. Sometimes you just want something clear, something that, well, actually works.
Absolutely. And that feeling, that overwhelm, that's exactly why we're digging into some really interesting material today. It actually comes from the EcoTrads channel. They put together this really powerful but free trading setup. Just two core indicators. It's all about cutting through that noise.
Yeah, simplifying things. So our mission today is pretty clear. We're going to pull apart the exact entry logic, the exit logic, how they manage risk, which is crucial, and look at the actual results they demonstrated. And one thing I liked about the EcoTrads material is how they really encourage you to get involved. Like subscribe, hit the bell for more strategies. We want that kind of vibe here too.
Definitely. Yeah, by the end of this, you'll have a solid step-by-step grasp of how to blend trend and momentum. We'll cover setting up these two PineScript indicators, that's TradingView's language for custom tools, lets you really tailor things, plus practical risk management insights shown with real examples. And look, they're pretty confident they mentioned over 80% accuracy in backtests. Not a magic bullet, but a really strong foundation.
Okay, and they tested this quite specifically, didn't they?
Yeah, the focus was on Ripple USD, so XRP, on the 1-minute chart, really getting into the weeds there.
Right, the 1-minute chart. Okay, let's unpack this then. The core idea seems to be this combination, the synergy between trend and momentum filters.
Exactly. It starts with the first one. The simple trend and compare indicator. The logic behind it is it uses whole moving average crossover. Think of it like a faster, smoother moving average to spot the trend.
Hull MA, okay. And they tweak the settings.
They did. Key ones, Ho length set to 50. That finds a sort of balance, not too jumpy, not too slow. Then upper arrow to below, lower arrow to above. This just cleans up the signals on the chart. They hid some other options too, just for clarity. Visually, it's simple. Green line, uptrend, trends changing, could be up or down starting.
Got it. Green for go, yellow for caution, basically. But a trend signal alone isn't always enough, is it? How do you get more precise? Where does the second indicator come in?
Yeah, that's the key question. Precision comes from the second tool, the JKSW Strength Momentum Index. This one's job is really to measure the strength and direction of the momentum. It uses a kind of multi-linked RSI smoothing technique. It sounds complex, but it helps confirm the trend signal.
Okay, multi-length RSI, and specific settings for this one too.
Oh yeah. Overbought is green, oversold is red, midline is blue. Importantly, the source is changed from the default OLSI4 to just close. So it focuses purely on closing prices. And the bar lengths are critical. Short bar is at 10, mid bar is at 350, and long bar is at 110. These different lengths give you a layered view of momentum, short-term, and longer-term perspectives together.
10, 350, 110.
Okay.
And the signals, red and green lines.
Simple again. Red line means overbought. That suggests maybe it's time to think about selling. Green line means oversold, suggesting a potential buy signal.
Okay, so trend says go up, momentum says it's oversold. That sounds like a potential buy. How does it all come together for an actual trade? Let's walk through the buy logic.
Right. For a buy trade, you need three things to line up. Condition 1, trend indicator must be green, uptrend confirmed. Condition 2, the JKSW Momentum Index needs to show that green line. That's your oversold signal, suggesting a dip is ending. And condition 3, a bullish candle. You need price action to confirm it, that final visual cue.
Trend, momentum, candle confirmation. Check, check, check. Then you enter.
Then you place the buy order. Stop loss, your SL, goes at the previous low. That's your safety net. And the target, the take profit or TP, is set for a risk. Reward ratio of 1 to 1.25. So risking $1, let's say, to make $1.25, it's about managing that risk consistently. The examples they showed had some really clean wins hitting that target. Shows how powerful it can be when everything aligns.
That makes sense. Very disciplined. Waiting for all three confirmations. Okay, what about selling? Is it just the mirror image?
Pretty much, yeah. For a sell trade, first, the trend line needs to flip from green to yellow. Trend change signal. Second, the JKSW Momentum Index shows a red line. That's your overbought condition price might be too high. Third, confirmation with a bearish candle. Price action agrees.
Trend change, overbought momentum, bearish candle. Got it.
Then you place a sell order. Stop loss goes at the previous high this time. And again, same risk. Reward target, 1 to 1.25. They highlighted winning sell trades too, showing that same alignment. It makes it very systematic.
Yeah, that systematic approach is appealing. It removes a lot of the emotion, maybe.
Exactly. But, and this is crucial, risk management is everything. We have to stress this. Like we always say, no strategy wins 100% of the time. You will have losses. Managing risk is how you survive those losses and stay profitable long term.
So there's rules. Use a stop loss, always. Aim for that consistent RR.
Non-negotiable. Absolutely key. Protect your capital. Stay in the game.
Right. So let's talk results again. You mentioned the back testing on XRP-USD, 1-minute chart, crypto, short time frame, volatile.
Very. And the results they shared were quite striking. Out of 5 trades shown in their backtest example, 4 were wins. That's an 80% win rate, which, sounds fantastic.
80% on a 1-minute chart. That does sound almost too good. Did they mention any, caveats, times when it might struggle? Because no system works perfectly in all market conditions, right?
That's a fair point, and yeah, they did touch on that. Like most trend-following systems, it's going to perform best when there's a clear trend. They suggested that really choppy, sideways markets or periods of super low volatility could lead to more false signals. So it's not quite set and forget for every single market condition, but when the conditions are right, that 80% win rate, combined with the 1.1.25 risk-reward, resulted in a net profit in the example of plus 4.5 R, which is really powerful for such a simple 2-indicator setup. And like you mentioned, the EchoTrads team, they encourage you to actually try it on live charts, see it working. They often prompt viewers to share results too.
Right, fostering that community aspect. So wrapping this deep dive up, what we've really uncovered here is the potential power in combining just 2 focused filters. You get a clear, systematic way to spot entries and exits. And it seems validated by some pretty compelling backtest results, even if, we need to be mindful of market conditions. It really shows how maybe focusing deeply on a couple of tools can beat getting lost trying to use dozens.
It does. And that leads to maybe a final thought for you to chew on. This strategy shows impressive accuracy, seems to deliver consistent profit, and it's remarkably simple. So the question it raises is, how much complexity do you really need for effective trading? Could it be that a focused, well-understood setup like this might actually perform better than something way more intricate? Something to think about is less, sometimes more.
That's a great takeaway question. Less complexity, more clarity, maybe better execution. Worth considering. And look, this deep dive has laid it all out for you. You have the logic, the settings, the risk approach. You can test this yourself. Like the EchoTrads channel asked, what's your win rate going to be? Try it on your favorite pair. And hey, if you found this useful, do what EchoTrads suggests for their content. Give it a like, maybe check out their channels and subscribe, hit that notification bell. Keep learning, keep engaging. Until next time on The Deep Dive.